So let's get back to the market street and get a sense of where we finished off on Friday. Of course, two EMPs on our market, like Oando and Seplat, are in the news for doing two separate deals. Oandos inked a new deal, a 20-year gas supply deal to NLNG Train 7, while Seplat is putting $350 million on the table to acquire L&G Oil and Gas PLC, which is a foreign oil company, and that's expanding the operations of Seplat, which is an indigenous oil company listed here in Lagos and on the London Stock Exchange. So let's get Adedayo Bakare, who is an investment analyst at AfriInvest, who is live to us from the Stock Exchange trading floor in downtown Lagos this morning, into this conversation. Adedayo, good morning. It's good to have you. I'm sure when corporate news gets into play, you analysts get your ears ticked up. So let's start from the current one, which has to do with Oando going to bed with NLNG for Train 7, 20-year gas deal. This is as big as it can get for Oando. What do you say?
Good morning, boss, and thanks for having me on the show.
Morning.
Yes, that was quite an interesting news to hear. Basically, what we saw, from the news is that the JV, the joint venture agreement with Oando is part of with NNPC and NAOC have reached, an agreement with NLNG to continue to, supply gas to the company. So they call them gas supply agreements. And basically, what the agreement that was reached was in two phases. So in the first instance, the current supply that the JV, the obligation they have to Train 1 to 3 has been renewed for another 10 years. So that means, based on the contract they have, that's around 334 million of cubic feet, that will continue to be supplied under the agreement. And the other part of the agreement is that the Train 7, which is expected to, the final investment decision is expected to be taken soon, and completion is over the next 5 years, which means for even NLNG itself, it's going to be able to improve its output from like around 22 million tons to like 30 million tons, which is an increase of 35%, which means the impact of the Train 7 is actually going to be quite significant. What this means for Oando is, as part of the JV they have with NAOC and NNPC, they're going to have the obligation to supply a total of 1.1 billion cubic feet of gas to NLNG. And the agreement that was reached was that this is going to be for 20 years. And basically, from an investor standpoint, what this means for Oando, which its main business is really along the lines of supply and trading, because based on recent financial numbers, you discovered that trading still continues to take a larger share of the company's revenues. But lately, at least over the past few years, we've seen Oando expand its footprint in the upstream oil and gas industry, and due to that, we've seen a persistent increase in oil production as well as in gas production. So basically, we believe this is a very, very sound agreement that was reached by NLNG and Oando, and it should position the firm for improved performance over the long term, especially as when you see agreements like this that over 10 years, 20 years, they are long term in nature, and that means from a cash flow standpoint, it means that there's consistent earnings potential. At least stable earnings over a period of 10 years to 20 years. So it's very, very positive for the market.
I'm sure everyone will agree. Oando needs this agreement. It needs this financial inflow, and it needs this on its books, considering the company has been struggling with debt and a few other positions. So I'm sure you were not surprised when Wale Tinubu, the Oando CEO, says this will strengthen our financial position as well as demonstrate to our key stakeholders the company's growth potential, and said this NLNG supply agreement, it is testament to the potential of local players in the industry. So, aside the money, which Oando Energy Resources, the subsidiary and the parent company really need. Taking part of what Wale Tinubu says is a testimony to the potential of local players when it comes to multi-billion dollars projects such as the NLNG. This shows that local companies could raise their game, isn't it? And they can be part of the big picture when it comes to investment in the oil and gas.
Absolutely. To speak to the first issue you mentioned, yes, Oando has a lot of debt on its books. And with agreements like this that has been reached with NLNG, we believe cash flow should improve, and the company should be in a better position in terms of meeting its financing obligations, as well as making profits and paying out profits to shareholders. Currently, if you look at the books of the company, they continue to struggle with, even when you think in terms of the operations, they're making profits from some of the operations, but when you take out finance costs, you see that the bottom line, there's just very little left in the bottom line, and due to that, the capacity to continue to invest, for growth, and also to even return money back to the shareholders is limited. So on that basis, we believe this is a very good development. Also, in terms of indigenous players, over the past few years, the Oando with Seplat, we've seen sustained interest and investment by indigenous companies in Nigeria, and we believe these deals, this type of deals, this type of partnerships should continue to improve their capacity to also to undertake large-scale projects, especially in situations where we have a bit of reluctance by foreign investment to come in due to overdue oil and gas reform. So having indigenous players step in and to finance some of these transactions, and even the knowledge they're able to acquire from these transactions and the contribution to the local economy, we believe it's a very, very good thing for the market.
Okay, great. So let's talk about Seplat, Petroleum. I'm sure the $350 million story is what you investment analysts, research analysts, and advisors have had time over the last 1 week or 2 weeks when the news broke out. Now we're getting to that deadline. The time for Seplat to put $350 million on the table, cash transactions. You think this is a good deal for Seplat?
Yes, we think this is a good deal for Seplat. Seplat story since operation has been very, very inspiring. And not just in terms of the financials. When you think in terms of even the way the company is run, managed, corporate governance and all, Seplat has really done well. And in terms of the company's operation itself, we've seen a sustained increase in terms of revenue potential of the company. They continue to generate a lot of money, and they pay out a lot also as dividends to investors. So we believe this is another feather in their cap. And with the assets, the OML 40 asset that Eland has, and at least 45% interest in, with Seplat, acquiring Eland through this deal, it should improve the production capacity both in terms of crude oil production and as well gas. What we've seen lately is, due to the volatility in the global oil market, which affected the operations of the company between 2016 and 2017, we've seen a bit of recovery due to the stability in oil prices. But one thing we've noticed with Seplat lately is increasing diversification towards gas, because prices are a bit more stable compared to crude oil prices, and we've seen the company continue to invest in such areas. So on that basis, we believe the new acquisition of assets should improve production. Production is currently around under 30,000 barrels per day, and it is estimated that upon the conclusion of the deal, it should be closer to 40,000 barrels per day, and also a lot of gas production will come on stream. So due to all this benefits in terms of increasing production and generating more revenues, we believe it's a very, very good deal for Seplat.
Adedayo, 1.2% haircut for the composite index of the Nigerian stock market last week. What's your reading of that? And do you think the market will remain this tepid as we start the new week, penultimate the week to Christmas?
Yes, absolutely. Performance was quite disappointing last week. The market dipped around 1.2%. Also, I mean, what this just tells us is investor sentiment currently in the market is very, very weak. A couple of weeks ago, we saw a bit of a momentum, but it seems the market has lost that steam. So going into this week, we expect the same trends to continue. Investors will continue to look for prices that have been beaten down to take advantage of capital appreciation, and also for many stocks that have done very, very well, we expect some sell-offs. So it's basically a balance of things, and on balance, we think the market is still very, very weak in terms of, even when you think in terms of the volumes and the values traded in the market compared to what we had a few years ago. It's been very, very poor. Also, foreign investment into equities has been very, very dismal this year, and very likely to continue into next year unless we see a bit of reforms in terms of the monetary policy and fiscal policy. So for us during this week, we expect the market to remain tepid. We most likely see another run of loss this week. But closer to the end of the year, we could see a bit more interest in the market.
I'm trying to ask you the final question in just one quick second. Should we kiss Santa Claus rally a goodbye? Or is it coming?
No. No, I mean, it's
not likely.
Unlike in previous years, what we've seen in the market is it's not very likely to see that rally that you will see normally.
Oh, too bad, too bad, too bad.
I mean, even if you see anything at all, it's going to be very, very small.
Very small. Thank you so much. Let's see how it all plays out. We're kind of about a week before Christmas trading. There's going to be a couple of days, public holiday next week here in Nigeria. So be on standby, everyone. Thank you so much, Adida Bakari from Afrinvest, an investment analyst there. And thank you, everyone, for watching the show. I'll see you again tomorrow, Tuesday. Inflation for November is the first story you're going to have from here.